right. Well, welcome back to Macro Micro Moment with Arthur Laffer and Nancy Jr. and Nancy Tengler. We've got a big show for you today. I think we're exploring some new areas and we'd love your feedback. So reach out on X if you have any questions or comments. We'd love to hear them. So in the start of the show today, we're going to talk about stocks. We're near the end of earnings season, so we have a few more companies to report. Two very important ones tomorrow. We're gonna talk about that, and we're going to focus even further on the earnings season that was and how it turned out, what the overriding themes were. That's going to happen with our senior analyst, Jamie Meyers. And then Arthur's going to take you around the world, and that should be a lot of fun. But first, let's start with stocks. So one of the things that I've learned in this business is you have to know who to listen to. And when Brian Reynolds talks, I listen. Brian Reynolds has done a tremendous amount of work on credit and how it impacts the stock market. And so one of the things that he is focused on is what we call the shadow banking system. So think of underfunded pension plans and insurance companies who seem to have an insatiable appetite for corporate debt. So they've been big buyers of corporate debt. We've had record issuances. And what have companies done with that debt? For the most part, they've invested in CapEx, but more than that, they've invested in share buybacks. And share buybacks are one of those things that get the ire up of many in Congress and the Senate. But effectively, what a share buyback does is it reduces the number of shares outstanding, and that raises the earnings per share. And that's why stock prices tend to go up post share buybacks. But one of the other things that Brian has focused on is valuation. You're hearing a lot on the financial news network say that stocks are overvalued. They'll cite a PE of 27. Some will cite a PE of 24. But what really matters is the relationship between stock prices or the earnings yield on stock prices on stocks and junk bonds. And I'm going to cheat because I'm not nearly as smart as Brian. But what he's focused on is the earnings yield on stocks is 3.7%. That's half of the yield on junk bonds. Why is that important? It's because junk is the currency that financiers can convert equity into debt. And this relationship is right in the middle, as you can see from the chart, of past measures where investors can profitably buy companies using debt. And the determining variable seems to be credit flows. So if you look at that chart on the right that he has prepared and we're borrowing with his permission, you can see that there are times when stocks have been extraordinarily expensive, and then as in 2021, and then where they are now, which is kind of middle of the road, not certainly not cheap, but not expensive. I would point out also that in 2021, going into 2020, actually, we thought stocks were, by our metrics, we thought they were very expensive, and so we bought puts on the SPY just to provide some protection for our clients, which worked out very nicely. We didn't know about the COVID bear market, but it worked for us nonetheless. So, just an important metric to keep in mind when you worry about or think about whether or not stocks are too expensive because they've run up so dramatically. And then I'm just going to jump in, and Arthur, you weigh in on technicals. I don't know if you want to, but if you just look at, I don't either, but it's an important metric. If you just look at the number of stocks that are trading above their 200-day moving average, you'll see that it's above 70%. And that's the range that you need for a bull market to continue. Between 60 and 85% is where we've been all year long. But you really want to see a greater than 70% number of stocks that are trading above their 200-day moving averages. And indeed, that is where we are.
And remind everybody that stocks should be forward-looking.
Yes.
So you should be looking out the windshield of the car, not in the mirror.
No, that's what the Fed does. They drive through the rearview mirror. We don't want to do that.
I say they drive through the windshield, but unfortunately, they're going backwards.
And then we have two companies reporting tomorrow, and I'm just going to spend a couple minutes on that before we jump into Around the World with Arthur. But if you look at the two names that are reporting tomorrow, they're both critically important. One is CrowdStrike, and CrowdStrike became infamous with the largest, one of the largest IT outages you might remember that grounded Delta airline flights. Now there is another side to that story. Delta hadn't done a lot of the upkeep and updating that was required, but in effect, CrowdStrike is a cybersecurity company. They are expected to beat on revenues, and they've been able to beat on EPS or earnings per share 10 out of the last 10 quarters. This quarter, we'll be happy if they match last quarter because of the expense of the outage. But I think it's important to note that they are expanding in Europe. They are expanding their AI offering. And so this is a company that we own in our equity growth portfolios. And if we get any pullback, we'll be adding to the name. So pay attention to that one. The second one is Dell. And that is a company that is right smack in the center of the AI CapEx spending. We are continuing to see companies, the enterprise companies. So think big corporations that utilize the equipment. These are the companies that are buying the chips from NVIDIA and to a lesser extent AMD, and then they're parking them in Dell server racks. The spending is expected to grow exponentially into 2028. So this company has had a pretty nice run. Revenues are expected to go up 10%, but there's been real concerns over the margins in the server business. So that's what we'll be paying attention to. If you get a pullback in the stock, again, we own this in our equity income strategy and our ETF TGLR. This is a company that we will be adding to on weakness, and if not, we'll just enjoy the ride. So those are just two tomorrow. And then lastly, we've decided that with each episode, we want to leave you with a couple of names that you can really own for the long term. I call them stocks you can own for a lifetime. The two that I want to, I'm not going to spend a lot of time talking about it. You can go to our website and read what we've written on these companies. But Tesla is a company that is no longer trading like an EV company. And yes, there's been a certain amount of bump since Elon Musk joined up with the Trump crew and is the head now of the Department of Government Efficiency, or Doge, which I think is pretty hilarious. But this is a company that is one of the largest AI companies in the U.S. It is also in the business of storing renewable power, through their mega packs. And so these are utility grade battery packs that segment of the business grew at 52% last quarter and is the most profitable, though law of small numbers, keep that in mind. It's not a huge portion of the business, but it is a business that's growing. And then you also have full self-driving Cybercab. And as we talked about last week, I think my home healthcare plan, the Optimus robot that can carry a tray with a martini on it. And oh, by the way, shake the martini. So that's one. And then the other is the poster child of our investing theme, an old economy company that has embraced digitization, robotics, generative AI, and generative AI cloud computing. And that is Walmart. They just reported another knockout quarter and knocked Target certainly off of the playing field with just superior earnings and growth. So those are two. Do your own research, but we own Walmart and also in TGLR, which is our ETF. And yeah, so those are two names I think you should take a look at. And then I'm going to give you a G whizzer, and then we're going to break and turn to Arthur. But the macro moment of the week is the following. We recently, and many of you may already know the answer to this, but please weigh in on X or send us comments. This outstanding piece of art that we're about to show you recently sold, and I mean artwork, not Art, my partner, recently sold at auction for, and we've given you 5 choices: $620, $6,200, $60,200, $6.2 million, or $62 million. The good news is that the artist has declared that the person who purchased it can indeed eat the banana and then replace it with a new banana, and it won't compromise the quality of the art. But we'll come back to you at the end of the show and let you know what the right answer is. So
It kind of
we're going to
smacks of the whole NFT craze, doesn't it?
it really does.
Or maybe this is what Biden inflation has come to.
So we're going to break now, and we'll come back with Around the World with Arthur.
Hey everybody, welcome back. And this is a new segment we're going to hopefully we won't do too often, because I don't think the election cycles are going to happen as often as everybody feels like they've been happening lately. But this is the macro micro moment, and we're doing Around the Globe with Arthur. That's me. I think I'm about to get my kids are going to wail on me after that one.
Yeah, does Michael Dukakis come to mind with the?
Yeah, God, climbing out of a tank with a helmet on. John Kerry in the clean suit. This is gonna be like Christmas cards or something. It's gonna be something horrific.
Oh, it's great.
So I know in the U.S. everybody's kind of recovering from the election hangover, which in our business never seemed like it ends. But if you're in the U.S., you might not have as much of an awareness of some of the things that have been going around the world. We had a recent election not too long ago in the UK, and I want to touch on that really quickly. I'm going to touch on a couple other countries that are having some unique challenges, and a lot of this stemming from the political process, and then it works into the economic and policy process. So to us, economics, the macro of the world starts with the political process. You have to understand the political process to understand what's going to happen to a policy mix, and then which way you think in macroeconomics, and then really ultimately down to stocks and bonds and individual investments. So you start at the top level, which is the political. So we're going to start there really quick. Now, the UK had an election. It was, I'd say, a watershed election. The Labour government, which has been out of power for a very long time, came back in. And I think there was some hope that with the, kind of disarray with the Tory party and getting knocked off, that Labour, this is a kinder, gentler Labour. And my view of the world is this is not a kinder, gentler Labour. They signed the most recent budget under the picture of one of the founders of the UK Communist Party. So that should set the stage as to what this budget looks like. The budget looks like taxes across the board for the most part. Big expansion in the government sector, which was not a small part of the sector to begin with. You're seeing increases in property taxes. by lowering the threshold, the tax threshold. You're seeing an increase in the employer portion of what really is like Social Security here in the U.S. up to 15% now from 13.8. Increase the minimum wage. I'm actually have to look at my notes. There's so many things. Taking the debt cap off, so they're planning on spending a lot more money and financing it with debt. Just as the UK is trying to lower interest rates, they're going to have a hard time with that. The GDP revisions in the UK have been revised, primarily not much down from prior numbers, but the forecasting is that the growth is coming from the public sector, not the private sector. Taxes on private school tuition, um, and then obviously increased spending on the NHS, which is a huge line item. Not to say that healthcare isn't important, but I think they could probably use the Doge in the UK. But this new Labour government, that's not going to happen. Interesting enough is that you see a lot of polling coming out already. There's a guy named Nigel Farage, and he's now with the Reform Party. He was the one that pushed the UKIP, pushed the Brexit. You remember the Brexit? Anybody who remembers that little fun story there? But he basically pushed the some of the Labour Party people out, and now the Reform Party is kind of looks like the conservative party, and they're picking up in the polls. Tories are a little bit, Labours are already starting to fall in the polls, although elections are pretty far away. So the UK is going to have to take their lumps for quite some time. I thought another one that actually we just had a snap election called in Germany. Germany, if Taylor, if you could put up the chart for the German polling. Interesting enough, so right now we've got what we call the traffic light coalition, and it's a combination of the Greens, the Social Democrats, which is the SPD, the red bar in this chart, and the FDP, and these are very unlikely co-conspirators to kind of run a government. But these are the current polling. The union is the CDU-CSU alliance. This is the party of Merkel. It's now run by a guy named Merz, and you can see they're picking up steam, and they look like they're now going to be in the snap election, which is I think in less than 90 days. It's February 23rd is when the election's called for, because the coalitions broke up. The CDU, the union, that's good. You want to see that. I think that's good for policy outlook. It's good for stability. The kind of the odd man out here, or the redheaded stepchild in this election, is the AfD, which is the Alternative for Deutschland. This is considered a far right party, and you look at it, it's actually now predicted to be the second largest party. The other parties are trying to band together and actually get them excluded from running candidates, and the fact that they're basically a quasi-Nazi party, but they really position them as a far right. So I expect this CSU to really pick up in this next election in February, and to either build a coalition with the FDP, maybe the Greens, although the Greens have been losing a lot of steam. But I think everybody's going to continue to avoid the AfD. But the CSU, the union, that's a good thing for Germany. Unfortunately, it's not coming fast enough. France has got an interesting story going on right now. France had basically a snap election by the President Macron. He was trying to basically lock in his gains as he saw the polling numbers are going against him. It did not work out to his benefit. What ended up happening is he actually had to build a coalition now to run. And you basically got a minority government trying to pass a budget. Le Pen's party, which is, God, she just changed the name too. The National Rally is the new kind of right-wing government. They're going to probably deny the budget, and it's going to cause basically the budget to fail and the government to fall apart and become a caretaker government until the next elections come up. What's interesting, though, is that you got a hung government, nothing can happen, but they actually, I don't think, can call an election like a snap government. You can only have a snap election over so many. You can only have so many snap elections over a certain period of time in France. And France has, I think, one of the more convoluted election cycles where if you don't win an outright 50% as a candidate, it goes to a runoff. And then these guys team up against other parties to knock them out. They basically horse trade candidates. So France is very unusual. I think it's going to be a very difficult time going forward, passing budgets and getting any kind of resolutions and actually governing is going to become very hard. Other interesting thing is Spain. You have a current caretaker government run by the socialists. The PP is the Popular Party, and the Vox Party. Those are both right wing. In fact, Vox came out of the Popular, the PP, the blue chart there. I think the next election cycle, you're going to see the Popular and the Vox team up and form a majority government, which would be the first time in years now that they've actually had a majority government running the things in Spain. Huge PR disaster. There were huge floods there recently, and it caused, I think, the Socialists, which is the PSOE, a party which is left-leaning government under Pedro Sanchez, actually really have a hard time with his polling. They're falling in polls. So I expect the next election there to actually turn out to be good for the conservatives, which tend to be more pro tax cuts. And that's what we do. And not to be outdone, Ireland's got an election in 4 days. The interesting thing about the current election in Ireland is I don't think you're going to see any change. The FG, which is honestly, I can't even pronounce. They're all Gaelic. I can't pronounce them. But basically, the FG and FF are going to partner up again. That'd be my best guess. And you're going to really see more of the same until something else happens and Sinn Féin can actually make a breakout or these guys can get a majority. But I think it's more of the same in Ireland. And the last one I say is Canada's going to have elections next year. And by all accounts, the Trudeau government is on its way out. His popularity is horrible. The Conservatives right now, if elections were held today, they'd have basically a full-blown majority in Canada. So you should look at the Canadian elections coming up next year, I think middle of next year. Trudeau to get thrown out, the Liberals to get thrown out, the Conservatives to sweep. It'd be pretty interesting.
Yeah.
Very interesting.
Yeah, that's a lot, Arthur.
That's a lot. And I didn't even touch on like places like Portugal because I don't think it's a big deal, but the Conservatives actually they didn't take a majority, but they're the largest party, but they can't govern because they can't build coalitions. So it's interesting that Germany and Portugal, the anti-right wing, and like Le Pen in France, the other parties won't ally with them and actually build a coalition.
So do you think there's any takeaway? Like, when Ronald Reagan won, we saw Maggie Thatcher and we saw many of those policies sort of spread throughout the world. Do you think there's a takeaway here of any sort for investors?
Yeah, but there is, but it's Europeans are, I mean, I guess they're different than their politics are very different than ours. The UKIP or the Farage's party, Le Pen, these are pro-union. They're not actually tax cutters. They're more what I call, what do you call it? I'm trying to think. Rockefeller Republicans in the U.S. They don't necessarily dislike government. They don't necessarily are against taxation. They tend to be more nationalists. So what the right in Europe tends to have across the board is this anti-immigration push, which is actually building up steam across all of Europe, not just the countries I mentioned. But they're not typically very pro-growth. So they're not big tax cutters. They like to spend. I don't think they've kind of hit the wall on debt and spending yet, although a couple of them are getting really close.
Yeah.
Maloney over in Italy too. I mean, I like some of their policies, but these aren't Thatcherites. These are not Reaganites.
Well, I think what it may tell us is what we think at Laffer Tengler, which is you stick to the USA and you stick to the companies that can deliver reliable earnings growth. So on that, let's bring in, were you done? I'm sorry.
Yeah.
Bye. Oh man.
Yeah.
Let's bring Jamie in. Jamie Meyers is senior analyst at Laffer Tengler Investments. And what we asked him to do is just kind of give us some overriding observations and themes that he determined through the majority of earnings season, which is we've just finished. So Jamie, I'm going to turn it over to you. We interrupt each other here. So, stay nimble and flexible, but please go ahead.
Sure. Very high level. Earnings season is about 96% complete. We've had a little over 3/4 of the company beating the consensus estimates. That's well above the 30-year average of about 2/3. So we're pretty happy with that. We saw bifurcation within tech. I mean, outside of big tech, there were some lofty estimates companies are still being discerning with their IT budgets. There's FTC pressure. And then in the materials sector, there are concerns over China and stunted world growth. But our biggest earnings beats this quarter actually came from communications and discretionary. Despite a bifurcated consumer, the consumer's holding up just fine, and technology investments are shining through. Nancy, I know you talked about Walmart, sort of the poster child for our investing theme, old economy companies that are embracing digitalization and AI and really using that to their advantage. So we're seeing a lot of that this earnings season as well.
So in other sectors.
Yes.
Yeah.
Yes.
Can you touch briefly on that, or?
Yeah, absolutely. I mean, we're seeing it in things like back office. I mean, from companies, that are just doing simple things like preparing taxes to medical device companies that are using AI to develop different proteins and stuff in the biotech realm. And then in industrials, I think importantly, because we have a shortage of workers, the productivity is going to have to make up for that. So that's what we're seeing across the industry.
Yeah, that's great. And there's many use cases in financials, along with even some of the staples companies. But generally speaking, yeah, it's really, I think we're early days in this productivity driven economic growth boom. We've slowed some, but I do think we're going to continue to see reacceleration, particularly if we get corporate tax cuts and some deregulation. So you put in your notes that there was a case for large caps. Can you spend a second on that?
Yeah, so large caps, we still believe that the value is there. They're direct beneficiaries of optimistic flows, specifically to the United States when the rest of the world isn't doing too hot. They're naturally resilient. Nancy, I know you've talked about this a lot. The tech trade, tech companies are new defensive companies. You have companies like Amazon that's spending $75 billion this year in CapEx, and after that is still generating over $50 billion of free cash flow. So these are enormous cash generating businesses. And growth has shown steady outperformance versus value this year. But despite the high valuations, all these earnings are coinciding with margin expansions, and see that going into next year as well.
Mm-hmm. Almost near historic highs in terms of margins, but there's certainly room to grow. I think what we know is that earnings have been outperforming the economy, and even with that going on, we still have revenue growth up 5%, over 5% for the last 5 quarters. So love to see that expand. Did you get any guidance from companies on? I mean, I wouldn't be surprised to hear them raising guidance on earnings. Did you hear much in the calls you sat in on rising revenue growth?
Revenue growth is still a little bit impacted for the next quarter or so, but the second half of 2025 is when we're going to see real acceleration. Industrials, discretionary, and even down to a couple of the staple companies as well.
Nancy, one of the things that's interesting is that when you look historically, regulatory reform, which we were joking about Doge this morning, sorry, at the beginning of the call, that is a tax cut, and it affects larger companies disproportionately more than it does smaller companies, because smaller companies from a macro standpoint tend to be regulatory skirts. And as one of their kind of primary functions is a way of avoiding big government. So if you look at corporate tax cuts and you look at big regulatory reform, if we actually get some meaningful reform, that actually is a tax cut, and it should affect the bigger, more exposed companies much more than little companies.
That is such a great point, Arthur. I was listening this morning to a prominent economist talking about how that Vivek Ramaswamy, he didn't mention Elon by name, but he said, their proposals are very naive. And I'll just remind our listeners and viewers that we see this all the time on Wall Street. So you have a new CEO going into Starbucks. He's meeting with the top team. He says, "Hey, we're not going to do this anymore." And the first thing he hears is, "Well, we've always done it that way." And guess what happens next? That person's gone. Yeah. So you can talk about how naive it is because they're not part of government, and of course, many people in America think that's probably a good thing. But your point is a really good one because there's a lot of enthusiasm around small caps, and it is important to note that this disproportionately benefits the larger companies. It's really good. Yeah. Yeah. Jamie, do you have anything else you want to add about any particular companies or things you saw before we go to break?
Yeah, I think just main themes. The consumers are doing just fine. The productivity growth is supporting real wage growth. High interest rates, rents, dividends has really boosted the non-labor income. So that's really what's been keeping the spending going. From the companies, any inflation that they see is going to be passed on to the consumer. Bottom line is what I heard from pretty much most companies. And then AI is going to permeate everything. Margins are high, they're going higher. We're entering sort of an industrial power renaissance in the sense that the demand is going to far exceed supply for the foreseeable future. And things are just getting faster. And as you touched on, Nancy, buybacks will continue to boost stock returns.
Yeah, and the only thing I would I'm not pushing back, I guess I would just comment on is that they can pass along inflation to a point. So what we're seeing in the consumer staples companies, of course, is that the consumer is dropping back. I mean, even I gave up Cheetos because it was just way too expensive at $5 a bag. I was like, so it's going to be, I think, again, there's going to be bifurcation. Some companies will be able to get away with it, don't you think? And some maybe not so much.
Yeah, you take a company like PepsiCo, and I mean, over the past couple of years, they've raised prices to an extent that either they're going to have to cut back, or people are going to have to get used to them, and that takes a long time, unfortunately.
Yeah, I'm never going back to Cheetos. That's a PepsiCo product.
Substitution
out-
effects.
Oh, go ahead.
I mean, substitution effects really kick in. Price increases.
Yeah,
Yeah.
generics and yeah. So, okay, well, great. We're going to go to break, and then we're going to come back with our new segment, short but sweet, under the radar, and then we'll give you the answer to the banana artwork question of the day. So stay tuned. All right, thanks for hanging in there with us. Our new segment, Under the Radar, is just kind of a gee whiz factoid of something that many may or may not know. But our focus today is on the companies that have enjoyed the highest returns and appreciation in market capitalization since the election. So be no surprise that Tesla leads that list, but also NVIDIA, Apple, and I'm going to pause on Apple. About 5 years ago, I had a bet with Arthur's son, Arthur Laffer III. They're not terribly creative in this family. They just keep adding epithets to the name. But we bet on Samsung versus Apple, and I don't know, Arthur, what do you want to say about that? Who won?
I think you won, hands down.
He's a young man and he's very smart, so I don't want to,
Let's hope he learns.
One of the other names is Oracle. Oracle is the largest holding in TGLR, RETF, but more importantly, Oracle was sort of written off for dead in the whole cloud computing segment of the market, and the stock has just accelerated dramatically. Our friend Walmart was one of the others, and then last but not least, JP Morgan. So these are companies that are perceived to will benefit from a new administration and their focus on policy. So that's your under the radar for this week. And then the answer to the banana question, I'm going to let Arthur weigh in because I feel like I've talked way too much.
It's got to be 6.2 million.
6.2 million.
That's terrifying.
Right.
Beyond terrifying. That is literally, the artwork is nothing more than duct tape and a banana.
That's right.
I mean, that is just screams market top in art. Or
it's true. When many years ago, when I was at another firm, we sponsored the opening of the Museum of Modern Art in San Francisco, and one of the featured art exhibits was a corduroy Barca lounger. Yeah, this is right up there. All right. Thanks so much for joining us this week. And we'll be back with you next week. Same time, same disparate places. Arthur's in Nashville. I'm in Scottsdale. We look forward to seeing you then. Thanks so much.
Thank you.